Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And for some technical traders, they look for those stocks that have gone really quiet, under the assumption that might be the calm before the storm. Sometimes a quiet period for a stock is the winding or the coiling of a spring. And so for some, they'll look for just that trade scenario as the potential setup. So what might be an indicator that might assist with that? Well, today we're going to be talking about an indicator known as the TTM squeeze, which looks for quiet stocks and then provides signals when they appear to start a new move in a new direction. So this is going to be an interesting discussion. It's an indicator we've discussed in the past, but it's been 5 or 6 months since we had talked about it. So I thought it was about time to go back to the TTM squeeze. So if you're new to it, we'll go to a pace that everybody can follow. Before we can get to any of that, though, let me say hello to all of my attendees. Great, as always, to see so many familiar names out there in YouTube. Hello there, Ricebird and Jim, Omar, Selva, Manuel, Alfie, Greg, Marcus, Crispy, JDLMI, TD, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. As I was going through that list, there were a couple of those names that I wasn't entirely familiar with. So if you are here for the very first time, I want to welcome you as well. Enjoy the show. If you want to put it in your calendar to join us each week, that would be fabulous. Or you can watch on the archives. And for those of you that are watching on the archives, if you missed the live stream, but you're checking out the recording, that's a great way to watch these webcasts. But if you'd like to be here in the live stream, this is a Friday webcast series. We kick things off promptly 1 Eastern time. Certainly invited to join us. We'd love to have you here in our live stream audience. Now, as a heads up for my live stream attendees right now, we have a special treat. We have Kevin Horner is going to be hanging out in the chats with you out there. Kevin's going to be keeping an eye on those chats, watching for questions that I can't get to during the flow of the presentation. He'll be picking up my slack there. Thanks for having my back there, Kevin. Kevin and I have been now working together for years. Kevin is a fabulous presenter, very knowledgeable. Great to have you here, Kevin. And Kevin and I would also like to issue an invitation to everybody listening to follow us on social media. You can find Kevin and me on X. You can find Kevin there on X at Kevin Horner CS. You can find me on X at Cameron May CS, or you can also follow me on LinkedIn now. So go to linkedin.com/in/Cameron May CS. That'll take you right to my profile. You can give me a follow there. But let's get into this discussion of the TTM squeeze. Do we have any TTM squeeze traders out there right now? How familiar are you with this indicator? Just let me know quickly if you do that. But let's have a look, first of all, at the risks associated with trading and investing. Obviously, yes, technical approaches can certainly carry risk. They do carry risk. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. And yes, investing involves risks, including the loss of principal. All right. Marcus says it's new to you. Frank says not familiar. Richard says, yep, I'm familiar with it. Raymond says, love it. It's on almost all my charts. So yeah, we're going to talk about what it is, how it's built, the issues that it's intended to address, the potential benefits that it might deliver in the analysis of a stock chart. But of course, no technical approach is a guarantee of performance. But let's go, first of all, let's set an agenda for what we're going to be addressing today. Now, this is a portion. It's part of an ongoing series of webcasts. So we already have some positions in play. As a matter of fact, we had 2 trades in play, example trades from previous webcasts. One of those has concluded. So we really only have 1. So what we're going to do is take a look at our existing trade. We're going to look at the one that was just wrapped up. Then we'll look at the market conditions, look at the S&P 500. We're going to use that to sort of set the stage for today's discussion, but we will be observing it through the lens of what we call our TVM strategy set, our trend value momentum strategy set, just to provide a bit of a backdrop for today's discussion. Then we'll get into the TTM squeeze. We'll talk about how that indicator is built, the signals that it might generate on a chart, and then we're going to plan and place an example trade using the TTM squeeze. So should be a pretty good, well-rounded discussion of a new indicator for a lot of you, it sounds like. Alfie says not familiar with it. Greg says somewhat familiar. But let's go right to our paper money portfolio. We have shares of McKesson. That's our current position, but we have a position that's already been concluded. If we look at our account statement, we can see that back in November, on the 21st, we bought 33 shares of Palantir. Those shares were purchased for $154.44, and they have now been sold. Sold on the 10th. Today's the 12th, so just a couple of days ago. We had a target in at 188. You can see that order was filled at 188.03. If you want to see the history of this trade, you can see that trade being placed by going to our playlists on YouTube. So if you haven't done this already, make sure that you've subscribed to our Trader Talks channel on YouTube. So this is where you can join our live streams. You can also find playlists of previously delivered webcasts, now living as videos on those playlists. But I'm going to go to the playlists and scroll down, and right down here toward the middle is the Advanced Charting Techniques full playlist. I'm going to click on View Full Playlist. And back here, this one titled, Chartists Have Been Using RSI to Trade Stocks for Almost 50 Years. This was our Palantir trade. So if you want to go watch that trade being placed, that's where you'd find it. But here's what's happened. Let's go to the charts. Here's Palantir. So here's our RSI down below. And what we noted was the RSI had ducked down to, not all the way down to a 30 level, which is more maybe a traditional oversold condition, but got down below 35. We talked about maybe adjusting that level up sometimes when stocks or markets have been really bullish. So we're looking for RSI to get down below 30, or pardon me, 35. And we also noted at the same time, our moving average cloud, in this case, that 21 and a 63 moving average pair was still bullish. So you can go back and look at the logic of that again in that archive. But we took the entry right there. Now this just turned out to be a pretty nice entry. It was at a previous area of support. Coincidentally, this hadn't happened yet. It was still early in the discussion, but by the end of that day's trading, we had what looked like kind of a hammer candlestick pattern right down there at that support. So for a technician who wasn't using RSI and the moving average cloud in combination, maybe they just saw a hammer at support. In any case, we placed our trade. We recognized this as a potential support, so we placed an example stop down below at 140 with a target up here at 188, and you can see stock was cooperative. Signal turned out to be a good one in this case. Not all of them do, but in this one it did. And we rose up and 2 days ago hit our target. So we made a $33.59 profit on that trade per share, or in other words, 22%. Not a bad trade. All right, not all of them work out, but that one did. So here's our current position. So Palantir, we're done. McKesson, we own fewer shares because they're a higher price per share. And sort of breaking even, making a little bit of money right now. But I want to talk about this one. This one was, if you click on a quantity, by the way, you can see when a trade was placed. This is last week's trade. And this was placed using the zigzag high-low indicator. So let's load up McKesson here. And let's go to our studies. We've previously saved the study set for McKesson, so let's load up the MCK zigzag high-low. And so here was the trade. It was basically, we were just looking for a bullish, we'll call it a zig, and looking for a potential bearish zag to take us out of the trade. So as of last week, if you look at this, it looks like this oval where we took our trade is just kind of hovering out here in space. Well, conditions changed a bit since then. What happened here is we had a zig, which is basically a candle sticking its little nose up higher than the day before or the day after. But now we've kind of zagged, or pardon me, candle has stuck its tail down lower than the day before and the day after. But we've had a what we might call a zag. you don't follow the logic of this, you can go back and watch the archive from last week. It's just that this one didn't last very long. So in the case of a bearish zag, kind of got a little bit ahead of myself. Started describing a zag when I meant a zig, and that's actually not even what people call it. One's bullish and one's bearish. Anyway, just after taking our trade, let me zoom in on this. It'll be a little bit easier to spot. So we took our trade on the evidence of this low being lower than that one, but this one being higher. So it looked like we were starting to move up, but then it looked like we got a reverse signal. This high is higher than the one before. It's also the higher than the one after. That's kind of a bearish signal. But that quickly reversed. The reason why that's not being displayed on our chart is because it has to result in a move of at least 5%. And from this bearish signal, we didn't go down 5%. So all that's net has happened is that the original bullish signal has just been shifted down a little bit to right that. Alpha, you love the zig and zag? All right. But, for some traders, though, it's quite possible they might have been watching this closely. And this little bearish signal, this high that had a lower high before, lower high after, looked like we might be reversing down. They might have decided to get out right on that day. That's a possibility. We weren't having class at that time. We didn't have that discussion. Things have reverted back to bullishness, so we're going to let this continue to work. Let me remove that drawing. So McKesson, we're only up about 45 bucks. We'll just let that continue to work. So those are our previous trades. One has done very well. It's finished. It's a realized paper money gain. The other one, we'll see. But time to plan and place a new trade using this potentially new tool for some of you. It's known as the TTM squeeze. But before we do that, let's have a look at what's going on with the markets. So let's shift gears here and go to the S&P 500. I'm going to load up the S&P 500 TVM, Trend Value Momentum Strategy set. Somebody just asked a question, where do you get the zig and zag? So it's known as the zigzag high-low indicator. It's just one of our technical tools or studies that we can find right up here using the studies. If I just type in zig, I get zigzag high-low. There it is. And I demonstrated that in last week's discussion if you want to go back and watch that. Anyway, let's talk about the S&P 500, but before we do, I just caught something out of the corner of my eye. There has been a survey link that's been added to the chat window for the live attendees to give me some feedback. So if you are here in the live audience, if you do me a favor, look at the chat right now, click on that survey link, and that'll have that survey up. You can just stick it off to the side, fill it out after the webcast is over when you can give me some honest feedback about the kind of job you thought I did. But in any case, if you've never filled out one of our surveys, a couple of things to know. One is that it's a very short survey. 2 multiple choice questions, a comments box and a suggestion box. Another thing you should know is if you fill that out, I read through that stuff. They actually send that information to me. It's never a wasted effort. It goes right to who you would hope would see your feedback. Yeah, so I read through the data, I read through your comments and your suggestions, and it always helps. All right, thank you for doing that. But back to our discussion here of the S&P 500, let's look at trend, let's look at value, and let's look at momentum. So trend using the TVM strategy set. And some of you are probably thinking, I don't remember TVM strategy set. How do I find this? Guess what? Go to our channel. Here's a quick thing you can do. Instead of looking through the playlist, trying to find it, you can just click on a little search right here. Just type in TVM, and that'll take you to a video that I recorded called Understanding the Trend Value Momentum Chart Trading System. Okay. But basically this system looks at a potential technical confirmation of trend, a potential technical confirmation of short-term value, and a short-term momentum confirmation. So trend is defined as, according to this system, a 50-period triangular moving average compared to a 100-period triangular moving average, so an intermediate versus a longer term. And as long as the 50 is above the 100, that's typically interpreted as a continuation of bullishness. And that's what we have right now. So that's sort of a check mark for bullishness from trend. Looking at value, we have RSI, moving back and forth between overbought and oversold conditions. And right now, it's sort of in the middle. It's generally been moving up, a little bit of a downtick recently. It's kind of neutral. Maybe since we're above 50, we might call that somewhat bullish, but not definitively, not terribly convincingly. Anyway, now finally, our MACD histogram is pretty similar. Typically here, what we're looking for is, well, who has control or apparent control of short-term momentum of stock price? Does it seem to be the sellers, in which case we get red, or does it seem to be buyers, in which case we get green histograms? Right now, the histogram bars are green. That's usually a check for bullish, although there's a possible word of caution here. When we see a bright green turn to a dark green, it might mean there's a little slippage in that bullish momentum. But overall, that's a check mark for apparent bullishness for trend. We're tilting the scales toward bullish right here for value, and momentum looks like it's still bullish with a bit of an asterisk. All right, so there we go. But let's just say that our traders looked at all of that and they've decided, well, still looks on balance to be like a bullish market condition. So we are going to be trading bullishly today. We're going to be using this new indicator to set up a new bullish stock trade. All right. But I want to acquaint us with this new indicator first. It's known as the TTM squeeze. So let me bring up an example stock. Let's look at Coinbase. All right. And we're going to remove all the TVM strategy set. Let's come here and just remove all those studies. And instead, we're going to replace it, not yet with the TTM squeeze. I want to talk about the genesis, the reason why the TTM squeeze was created by its author, all right? And it has to do with a different type of squeeze. What's another indicator where the trader very commonly looks for something known as a squeeze? Bollinger Bands, right? So I'm going to go to the little flask icon here, and let's type in BOL for Bollinger Bands. Let's add that to our chart, and if you're not familiar with a Bollinger Band, it basically looks for a 20-period moving average, and then it applies an envelope with lines 2 standard deviations above that 20-period moving average and 2 standard deviations below that 20-period simple moving average. So let's click apply and click OK. And if you weren't familiar with this, basically, Bollinger Bands they're typically used to look for sort of, well, when stocks have made strong moves either up or down, or when they're going through a relative quiet period. So that's accomplished by first identifying trend. And for a Bollinger Band, for a traditional Bollinger Band, we define trend as just being a 20-period simple moving average. Next up is an attempt to define extremes around that trend. And specifically here, we're looking for levels at which price will have risen 2 standard deviations above or fallen 2 standard deviations below that line. Now, I know this is getting a little bit thick, a little bit deep in the weeds. If you're not familiar with the Bollinger Bands, I could go deeper into explaining, what a standard deviation is. It's basically an attempt with 2 standard deviations to draw a line around a trend that will capture about 98% of price moves. So getting outside of that line is going to be unusual. Should theoretically only happen about 2% of the time. That's what it's doing. Now, there are times when you don't have to draw the lines very far around that trend line to capture a big chunk of price. And we call that a squeeze. It's at times when the stock has gone quiet. Do you see this period right here in August and September where the stock really isn't doing much? Smaller candles, really range bound, pretty much going sideways. And you'll see these lines narrowing toward one another. So we refer to that as a squeeze because our upper band and our lower band are coming together. And for some traders, they look at that as sort of the calm before the storm. And then they might look for price to start moving toward one of those bands as a signal that, ooh, the storm's kicking back up again, the stock's ready to go in a new direction. So if that's your first introduction to Bollinger Bands, I realize that's a pretty high level, quick introduction. But basically, the trader's looking for squeezes. That sounds great in theory. It's just that with Bollinger Bands, squeezes happen all the time. If it's just a narrowing of the two bands, well, then this could be seen as a squeeze, and this could be seen as a squeeze, and probably this could be seen as a squeeze as this lower band is coming up and the upper band comes down a little bit, and this could be seen as a squeeze. With the benefit of distant hindsight, it's a lot easier to see the squeezes, but this indicator can generate lots of signals of varying quality. So sometimes a squeeze is, for some traders, significant, and other times it's just not. But how do we draw that line? Well, the creator of the TTM squeeze wanted to standardize this. So what they did is they used a different but related tool to standardize, has the squeeze narrowed enough and for long enough. Let me just clear this up. Let me clear up my drawing set. There we go. And they did this through the introduction of something known as Keltner channels. Oh no, we got to learn a different technical tool. It's true. The TTM squeeze is actually based on a combination of two other previously existing technical tools. So let's add a Keltner channel. So a Keltner channel is very similar. Let me add this to our chart. It's built around a 20-period simple moving average, but instead of drawing lines 2 standard deviations above and below, it draws lines 1.5 ATRs above and below. It's a narrower channel. That's what the 1.5 means. So just so we can see the difference between these two very clearly, I'm gonna, as I add the Keltner channels here, let's make the upper band a 3 out of 10 in thickness, and let's make the lower band a 3 out of 10 in thickness. There we go. Click apply, click OK. There we go. So now we have these two envelopes around a 20-period simple moving average. And really what a TTM squeeze trader is looking for is a time when our Bollinger Band lines narrow far enough that they come inside our Keltner channel lines. If you're not familiar with Keltner channels, like I mentioned, it draws lines above and below a 20-period simple moving average according to 1.5 ATRs. If you don't know, an ATR basically looks over the last 14 days and gets an average for how much that stock has moved in a 24-hour period over those 14 days. So 1.5 means we're taking that average price distance and going 1.5 times that above and 1.5 times that below our 20-period simple moving average. In any case, so the combination here is if 2 standard deviations can be captured within 1.5 days of average trading, that's a pretty narrow range. All right, that's the bottom line for a TTM squeeze. Yes, that's kind of some heavy lifting if you're trying to process that mentally for the first time, but it's just basically looking for an unusually quiet period on stock price, and it doesn't happen very often. You can see there are times when our Bollinger Band narrows, but just doesn't get inside of the TTM squeeze. Or there are times when it narrows and gets inside, but only very temporarily. But all of this lays the foundation for what the TTM squeeze does. Alfie says, should they be used with other indicators for confirmation? Some traders do. I'm not going to be doing that for today's demonstration. We're going to be trading just the TTM squeeze. So let's add it now that we've sort of set the stage for how it's built. I'm going to add the TTM squeeze to our chart. So let's click apply and click OK. And let's look at an example here. Let's talk about what the TTM squeeze looks like. First thing you'll notice is there's a series of dots going down the middle around our 0 line, green dots and red dots. Then you'll notice that there are blue histograms and red histogram bars rising above and below that series of dots. So what a TTM squeeze trader typically looks for is an extended stretch of one color or the other of dots. And most commonly, it's going to be when we have a series of green dots. Green dots means that during that time, the Bollinger Band is outside the Keltner channels. So you'll notice if we look at maybe this period back here in June, we get our first green dot. Our Bollinger Band is going outside the Keltner channel lines. And it stays outside the Keltner channel lines until here when it slips back in and our green dot sequence ends, it turns to red. So red is that signal. Bollinger Bands have slipped inside the Keltner channel. Now, as I describe this, here's a natural question that's going to come up. We might say, Cameron, couldn't we just use this up on the chart instead of this down below the chart? Yes, we actually could. But to some traders, they just think Keltner channels are just a whole lot easier to look at. You know, either we have a green dot or we have a red dot. So visually, it's just a little bit more intuitive for some. But transitioning to that red means that the Bollinger Band has moved inside the Keltner channels. Now that happens at times, but the squeeze doesn't last very long. So for example, you'll see, let's see if we find, there's one right there. See that one red? That means our Bollinger Bands went inside the Keltner channels, but they came right back out. Not a very sustained squeeze. All right? In this case, though, looking at the August example, our Bollinger Bands went inside the Keltner channels and stayed there for an extended period of time. This is seen by technical traders as a really long, extended, calm period in the stock. Those that use TTM squeezes, they'll typically look for at least 4, probably even 5 red dots, right? So that's what the green dots and the red dots mean. Well, the histogram bars are just indications of direction. There you go. Art's saying, shouldn't you wait for, 2 to 3 red dots? Yeah, at least a few, Art. Some traders draw that line at 4, some at 5. I guess if we're a little bit more aggressive, the trader might look for 2 or 3. But the fewer we use, that just means the Bollinger Bands have only been inside the Keltners for a little while, and maybe it's not the calm before the storm that the trader is really looking for. The trader is looking for the coiling of that spring, the narrowing of the range, the longer the period where the stock is quiet, typically the anticipated move is greater. All right. Alfie's asking a good question. Is this indicator recommended for intraday trades? Well, let me just make one statement here, Alfie. We don't recommend any indicators. I teach indicators, and then it's up to the trader to decide whether they're going to use it or not. However, can they be used on different time frames conceptually? Yes. Weekly charts, hourly charts. Really, we just need to change the time frame, and then we might be able to just use the indicator just the same way. Yep. Chris B, very well said. The longer the squeeze, the better the pop, theoretically. Yeah. It's always just a premise. Whether it plays out or not, it's going to be up to the individual trade. But the histogram bar colors, what is that? That's an indication of trend once we've exited the calm period. So let's look at this. Actually, let's go back here because it can go in either direction. If we look back here in February, we'll notice Bollinger Bands outside the Keltner channels, pretty wide range of trading. Then we get inside. There's a squeeze happening, and it lasted for several days. In this case, it looks like 6 red dots. Would it be helpful if I zoom in here? Let's zoom in there. There we go. So here are 6 red dots over here to the right. 1, 2, 3, 4, 5, 6. And then we get a green. And at this point, the trader begins to look for a trade signal. The green is an indication there may be a signal, but it's not necessarily the confirmation of the signal. All right? Wayne's asked a question. Can you show you how to scan for TTM squeezes? Wayne, I actually don't typically scan for TTM squeezes. I'll just scroll. I'll show you how I do that anyway. But here's a typical trade setup. When a trader observes, hey, there is a squeeze that's happening. So this is when they would do this. We're watching, there's one red dot, 2, 3, 4, 5. Let's say that the trader says 5's my minimum. This is a, let's call it a legitimate squeeze. All right. Let's say that our trader has described legitimate as the Bollinger Band staying inside the Keltner channel lines for at least 5 days. Well, at that point, when they see that fifth red dot, here's what is commonly done. We're going to look backward at support or resistance. Remember that these red dots indicate there was probably a quiet period, probably a channel leading up to this. So on the appearance of that fifth red dot, the trader defines for themselves where was support in that channel and where was resistance. And it looks like for this channel, might have been somewhere like that. Highs up here, lows down there. There's our range that led into this squeeze. And then the trader starts to look for a departure outside that range. This day, notice we have a green dot. Maybe we're breaking outside that, but we're getting red histogram bars indicating potentially a bearish move outside of that channel. If these were blue histogram bars, it would be indicating a possible bullish move outside of that channel. But probably more definitively in this case, it might have been this day. This day was probably a little bit more definitive for this trader. A break. There's our signal. So we're looking for at least 5 red dots. And then the first green signals, ooh, let's look back and see if we're breaking out of our channel. And that's the entry. So if that's the entry, where's the exit? Well, this trade might work out or it might not. So we have to plan for both. Right? And a common approach actually isn't unique to TTM trading. This is just sort of support and resistance trading. We look at the previous range that led into this squeeze, or that was identified by this squeeze, and the trader might assume a move of equal distance in the new direction. So here's what I'm going to do. When I've drawn using a channel tool here, drawn support and resistance using that channel tool, we can just right click on that and duplicate that drawing and make that a potential, there we go, a potential target. So in this case, if we were trading in what was the width of this range? From about 260 up to about 310. It's actually about a $50 range right there. It looks like not much, but that's about a $50 range. Breaking below 250 or 260 might take us down to about 210 as a target. In this case, it looks like it got there just within a few days. Sometimes this works out. Sometimes it doesn't. So that's a bearish example. Let's look at a bullish example. So right here, notice we got another 5 red dots. Look at how easy that was. 5 red dots and then a green. And the histogram bars are moving up. What does that signal? Squeeze with a bullish breakout. Let's look at this one. I'm going to zoom in on this. 1, 2, 3, 4, 5. On our fifth, we're going to look back over recent history and identify, using our channel tool, where was resistance, and it looks like it was probably around here. And where was support? Probably around there. And on the appearance of that first green, are we breaking out of that range? Yep. There's a possible entry signal. In this case, you can see the stock went up nicely. But how quickly did it, or did it accomplish the full width of the original range? Let's duplicate our drawing. Yeah, it did that pretty quickly. So these are 2 examples of a flawless indicator, right? No indicator is flawless. Let's look at one where it didn't work out and how the trader might plan for that. So there's a bearish signal. Here's a bullish signal. Well, right here was another one. There's at least 5 reds. As a matter of fact, we got a whole bunch of reds. So let's zoom in on that. 1, 2, 3, 4, 5. So on this fifth day, we might define where was resistance. Boy, support's a little bit potentially clearer. It looks like support possibly right through there. Depends on how far back we go. Trader can use their discretion there, but looking back over the last several weeks typically accomplishes it. But maybe resistance all the way up to here. Let me zoom out a little bit further. Could we have gone back even further? Lost my bearings. No, that looks about right. I think that's pretty fair because it looks like we had a pretty good touch right there, pretty good touch up here. So in this case, the trader is then waiting. Look at this. It just stayed red, kept going sideways. The squeeze is still in effect, still squeezing, still squeezing, still squeezing. Boom. There's a green. We probably nudged outside of that right here. So our trader might have been very enthusiastic. Wow. We broke out. It's obvious. It's nice with revisionist history to just go back and say, oh, I wouldn't have taken that trade. Might have looked legitimate at the time. So the trader might have been expecting this kind of a move, expecting a move up here, and it didn't happen. Instead, we came right back down into the range. This is a failed signal. How long do we hold on to this? Here's a general rule of thumb here. Quite commonly, by the time we recognize the move outside the original range, we're already some distance on our way up to that target. So, let's say there's $10 in that move to the upside, but we've already spent $2 waiting for the signal, so there's only $8 left. Well, at the same time, if we start to fall back down through that support, we have $2 of risk just getting back down to the support. So for some traders, in an effort to balance reward potential with risk, if we come back down below that support and we go more than about 25% back into that range, maybe we pull the plug again. Here's what I'm talking about when I say 25%. Let's say, and this one, well, actually this one, it looks like 300 to 350. It's another $50 range. Let's use those numbers, okay? So if we can envision that we've gotten up above and we're in our trade up here, and then the stock goes back down below 350, if it goes to 349, that's barely gone back into that range. What's 25% of that $50 range? 25% of $50 can be $12.50. So $12.50 below the breakout point might be where the trader places a stop. So why would that be? Well, that's $12.50 of risk coming back into that range versus maybe $40, $45 of reward potential, depending on how early we were in on the original breakout. That's where the balance might happen between reward and risk. If a trader's preference is to have more reward potential than risk potential according to the plan for their trade, that's how it might be accomplished. All right? There we go. Does that make sense? Breakout, target is just the distance of the original range. Stop is 25% of the range distance below the top side of the range. So in this case, it'd be 350 minus 12.50. Okay, there we go. So let's get some application for this. Let's go over here. Oh, by the way, somebody said, Cameron, how do I do a search for these kinds of signals? First of all, we now know that Bollinger Bands and Keltner channels are involved. They're not required. Let's come up here and just take those off. I had them on there to explain how this is built. We don't need to see them in order to trade this. So here's how I found today's example trade. I just loaded up some stocks to look through. In this case, I chose the S&P 500. I linked that watch list to the charts using our linking feature right here. And then I just started clicking. You click, and it really only takes a little while. Like you can look, here's a little Bollinger Bands, TTM squeeze here with a bullish breakout. You can spot these very quickly. Here's one recently. Look at this. Schlumberger. There was a narrow range. There's the indication of the breakout. We might have used the distance of that range. Looks like that might have been here up to there, but I'm guessing most of that has already been accomplished. Yeah, see that? But I just scrolled through these very simply, and it only took a moment. Look, there's one with a setup, but not a breakout. There's one with a recent breakout that's bearish. Ooh, there's one actually right there, BDX. But in any case, it only takes a second there to find some trade candidates. So I found RCL. Let's see what's going on with Royal Cruise Lines or Royal Caribbean. There's our squeeze. Let's zoom in on this. 1, 2, 3, 4, 5. On this fifth day, where was the resistance? Looks like it was probably about here. Let's get that as level as we can make it. Where was support? Probably down around there. Let's duplicate that. And that might set up a target up there right about 300 bucks. I didn't intend that to be such a nice round number, but it appears to be. It looks like our support was around 272.5, and our range distance, let's go from 244 up to 272. What is that, about 28 bucks? 25% of that would be $12. $12 below 272 would be 260 would be the stop there. Was my math right? I don't think it was. 244 up to 272 is 28 bucks. Yeah. Oh yeah, the $12 isn't right. It's $7 is 25% of that. So that would have our stop at 265. So here's going to be our stop right there. Notice that's 25% of the distance back down to that support. So there's going to be our trade plan. Let's buy our stock, sell at 300, sell at 265. Let's go to our trade tab, buy some shares of Visa. I'm going to crank up the number of shares that we've been trading. We've been keeping this relatively small. I'm going to make it a little bit larger. Let's put in a custom buy order with an OCO bracket. And at 340, how about let's do 10 shares. No, let's do 100 shares. That's going to be a $34,000 trade. Let's do a market order here to get in as quickly as we can. We'll put our stop up there at 300. Am I on the wrong stock? Let's make sure it's the right stock. Do that again. Right click, buy custom with OCO bracket. I know some of you probably corrected me there. I'll still leave it at 100 shares though. Let's put our target in there at 300. Our stop in at 265. Make both of those sell orders good till canceled. There's our trade. So let's click confirm and send. Buying 100 shares of RCL. Going to sell those at 300 bucks or sell at 265. Notice reward potential exceeds risk potential. Of course, a stop is not a guarantee that we'll sell at exactly that level if our stop is ever triggered. But let's send, and actually, I do want to do this. Let's make this a market order to make sure that we get a quick fill. Buying 100 shares at market price. Obviously, market order exposes us to just paying whatever the current price is. Not guaranteed our specific price. But we're going to sell at 300, sell at 265. No commission to be paid on this trade, and send that order off. Okay. Yeah, Richard, I did a market order because I wanted to get this done before the webcast was concluded, which is right now. So guys, time for me to let you go. Of course, quick reminder as we depart here is to make sure that you're taking full advantage of the educational offerings from Schwab. Make sure that you're subscribed to our Trader Talks channel. Just click on the subscribe button down below. Also, make sure that you're following Kevin and me on X. You can find Kevin on X at Kevin Horner CS. You can find me on X at Cameron May CS. But I post here, I'm very active, and if you reply to one of my posts, I try to reply right back to you. Also, you can follow me on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS and give me a follow there. But guys, we've accomplished what I set out to do today. We wanted to talk about how the TTM squeeze is constructed, how it might be used to generate trade signals, and also how we might want to plan for potential profits or potential losses. Got to manage both ends of those. Thanks for giving me your time today. Kevin, thanks for helping out. This is my final reminder to go out, fill out that survey. Thanks for everybody that's already clicked the thumbs up. That definitely helps. When you click like on one of our videos, it gives us a boost in the YouTube algorithm, a nice pat on the back to the presenter. Have a great weekend, everybody. I'll look for you in a future webcast. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.